You want to do the intro? Go ahead.
Oh, I will kick it off. I'm not sure what we're talking about, but I will kick it off. All right. Okay, we got... You're going to have fun with that, aren't you? Yeah, you are. All right. So Deborah Criddle here with Mann Mortgage, and I've got my, I guess, coworkers, I guess you could call us, right? Caleb, he's in our corporate office in the finance department.
Yep.
And then we've got Vanessa Rez, my BFF with renovation loans. We're very in love with those programs. And then David Doman, my friend who gets me out of saying bad things that I shouldn't say to other people, right?
Because you say them to me first.
Filter this,
fellow
David.
branch manager.
Filter.
Fellow branch manager.
He's a branch manager in which branch?
Portland.
Portland. And
Portland,
Vanessa's
Oregon.
in yours.
Vanessa and I are teaming up.
Work for Dave.
Yeah.
Sweet. So yeah. Why are we here, Dave?
We're here today. Well, we're here at the resort to celebrate, right? One of our core values.
The three of you, right?
Yeah.
You all officially were champions to our Champions Club. So we're all anxious to get outside and surf or sit on the beach.
Get a suntan.
In these hurricane winds.
White cap waves out there.
Thank you for not giving us all little lotions and suntan lotion. That would have been just like rubbing salt in the wound.
We were thinking about beach towels, like, okay.
Yeah. Okay, so one of our core values at Mann Mortgage is to celebrate. And every year we have a year-long period of time that we add up all of our loans that we've closed in the top 20%, right, of the company, are invited to come to wherever Don Mann decides to take us, and we get to celebrate. We are very, very taken care of. Food, drinks, entertainment, weather that sucks if you look outside, but, we're in Florida. I left Idaho with a blizzard.
It's warmer.
You left Montana with a blizzard.
It's all relative. It's all relative.
Yeah, we have some treacherous weather, but we're all here as friends and coworkers that are grateful to celebrate.
Yeah.
So congratulations to all three of you.
Congratulations.
Yes. Okay, so what do we want to talk about, kids?
I want to ask Caleb a question.
Shoot.
So Caleb, every year you write these poems. And I wanted to know, what is it? There's something between like the way you write your poems and then also how you, I think, conduct business and stuff. But where's this love of poems come from? From a CPA and from that accounting background.
Like a number nerd writing poems.
Yeah.
Yeah, that's
What's
interesting.
up with
that? I guess I would go back. I started doing it about 15 years ago and was not comfortable. I was looking at Toastmasters and all these different things online, kind of nervous, was like, how am I ever going to develop a ability to stand up in front of people and speak? Yeah. And at some point, I've written poetry like for myself and my family, just kind of quietly, for a lot of years, but I decided to do kind of a corporate poem, and it turned out pretty good. And I said, I'm going to stand up at the Christmas party and just put myself completely out of the comfort zone. And I did it. And I actually attribute it to, the guy, Michael Lau. He actually is kind of one of those mortgage legends especially in the capital markets and the secondary world. On the mortgage servicing right front. And his wife came up to me after, and, I was kind of bashful, probably stared at my paper the whole time and nervously did it. And she walked up to me and said, kind of grabbed me and said, "You better do that next year." And so I said, "That was very kind of you." So I wrote another one next year, and then off I went, year after year. And by the time you get to like November and even sometimes in October, people are asking, "Are you starting it? Are you working on it?" So people start to enjoy that. So, cool. But my mom, who is a pastor in a lot of ways, kind of almost a substitute pastor at a lot of different churches. And then my granddad was actually the same, and they did a lot of poetry. And so I saw my mom standing up over those years, and she would read poetry in front of people, and I always enjoyed them. And sometimes she read someone else's poem, but sometimes she wrote her own. And I thought, the crowd kind of quiet for some reason, rhyming schemes, kind of people like it and enjoy it. So I started a long time ago, and I keep doing it. And Mann Mortgage seems to enjoy it as well. There's always an element of, I try to do the lesson. It kind of gets Dr. Seussy, my cadence in these poems, because you want to be a little friendly and funny. but you also want to address some sort of issue, right? Because you don't just want to you want it to, I guess, look at yourself. What can you do different? What can you be better about? So I know that last night when I read it to the sales team, that a lot of you guys haven't even heard the last 3 years worth of them, probably.
No.
I can publish those to you as well. So
I think
That'd
it's
be
way
cool.
better that you do it because I believe you sent them out in emails before, but delivery with you reading it
a lot
and
different.
knowing you, I think, because like often a message in writing is much different in person than obviously that's why podcasts and video is so important, but the way that
So true.
the way that there's times even knowing your personality, watching you only read off the sheet, but then also not read off the sheet, you knew the words and reading to the crowd, but then back to the sheet, it's just kind of interesting. I think everybody's got their own little things.
I tried to memorize it one year and I got all the way through, and then like 75%, I was just, my mind went blank, and I was like, I knew this.
The music's
happen.
still
yeah,
playing,
it was like,
but
God,
nothing's happening.
It's funny you say that. Red Lights. Have you read Red Lights or Green Lights by Matthew McConaughey?
Oh, McConaughey, yeah.
Sorry. Great book, right? And then when you listen to the audiobook, his voice and the way he reads it, I would never read it now. I just want the audiobook. So it's
it's Matthew McConaughey.
Oh, and his voice is
his
so
voice
good.
is
Yeah,
iconic.
it's nothing like my, yeah, right.
Have you ever written a poem? I wrote one right now in my head.
Maybe you
All right.
Oh, let's
This
go.
is going to be good. This is going to be good.
I knew that was a loaded question as soon as you had a smile. Have you written a poem? Because I have.
You see if it's as good as yours. Ready? Roses are red, violets are blue. Mortgage rates don't suck. How can we help you?
Whoa. Are you sure you just wrote that?
I did. I was not engaged with anything he was saying. I was like, I got to come up with a poem right now.
Roses
got
are
this.
red.
I won't
Classic.
pass.
Maybe I'll start next year's with Roses are red.
Yeah. You're welcome for that. So anyways, really, never wrote in poetry?
Maybe when I was like in 3rd grade or something.
Okay, so what's your secret task? Like, what's your secret? What is your secret life? Like, he's got this poetry thing and he's a number nerd.
I don't know if I have
What's
one.
your-
It's all on social media all the time.
True.
Kids and working out, and
He's trying to do an ultra marathon. That's a big.
Oh, that's
soon, maybe one day.
Yeah. He
Yeah.
keeps making
It's
me
like-
try to commit
It's
to
like
it too.
threatening. I keep threatening everyone else, but not myself.
How about you? Do you have some secret talent that nobody knows about?
I make really good spaghetti sauce. Like
Oh.
really good spaghetti sauce.
Spaghetti for
Do you do meatballs or ground meat?
Ground meat or meatballs.
Oh, either one. Interesting.
That's kind of controversial.
Why, do you have a
That is
preference?
controversial. No, I mean I like both. Absolutely.
Well, there's
I'm not the one who has to make it, so I'm just happy. As a
Everyone
client.
does chili cook-offs.
Yeah.
We could do like a spaghetti cook-off
and
sometime.
then
Yeah.
I would suck at that. Yeah,
We have
you
some.
can be the tester.
I will.
Ragu. Are you bringing ragu?
No.
Prego?
No, I don't know. I don't know.
The jar.
So are you Italian? No, just that's the food group. Interesting. Have you ran 23andMe? Are you sure you're not like 1%?
No, I haven't done that, but I'm sure I have a little piece of.
Wow. All right. So you're a fitness buff. You do that like big time.
No, I know about it. I don't do it.
Yeah, I've seen you again.
You're really good at inspiring people.
Yeah.
Whether you see that or not.
Oh, thank you.
All in your life.
I agree.
He's like
You're-
flexing his abs right now.
We like,
So I'm
it's
like
just
a
behind my
big
keg.
Just tell me how wonderful I am. I did.
Oh,
I got
geez.
you.
You did. You got me.
Oh, yeah. Okay. All right.
So, yeah, that awkward silence. Well,
You can cut it out.
in a few minutes, I was supposed to get on a call with Renee Rodriguez. We all
Ooh.
know who Renee is, right? And he says that mastering the pause is like the thing to do
To get comfortable with
to get comfortable with that awkward pause.
I did that in the poem at the we.
You did. I noticed
You go dead silent for a minute.
yeah.
Boom. Yeah.
And then it just
You hit it.
impacts and just
It does.
explodes.
Do you know
Wow.
what happens when I pause? People are like, oh crap, what's coming?
Yeah.
Yeah. They're like, she's pausing to think we're screwed.
Are you
That's what-
No, what I always wonder, I'm like, is she filtering what she's about to say?
Yeah, there's a lot of filters in here. I promise there is.
AI's running and taking all the swear words out.
Yeah.
It's so true. You could say something 5 times. Probably it doesn't have the impact as pausing and then saying it once. Like way different.
I'm going to totally do that.
So I do have a question back to what we actually do. But, Deb's been around the block here at Mann. Kayla's been around for a bit. Vanessa, you've been here basically, let's call it a year. And
Is that all?
Yeah.
That's awesome.
and she's already sitting at the table, which we knew as soon as you came on board. We're like, Vanessa's going to be there next year.
Heck yeah.
But what integrating into Mann so quickly, not only just you, but a team of 3, you know, what were some of like maybe the easy challenges you guys overcame, or what made it easy to plug, maybe not easy, but what made it easy to plug in?
Okay. Well, coming to Mann was so different than what I was used to. So I had to give up what I thought, everything that I knew. And so I kind of felt like I was a fresh slate because I'd never been in this type of environment before. And I just learned everything from the ground up. And I really like the information that we have on the academy, all the education that's there, and so everything's there. You just have to go look for it, right? You need to know that it's there and to just take the time looking at it. And then I really like because I do a lot of construction ones. So the grids that we have, that grid, the 1-time and the 2-time grids, I'm looking at those pretty much every day. So that's been helpful. And everybody, all the management at Mann, they're very easy to communicate with. So, I find myself on Teams, talking to people face to face all the time. Well, especially in the beginning when I was just like a bull in a china cabinet trying to figure out what to do. And then people are helping me and realizing that I need the help, and help is easy to get.
It is easy to get.
So to clarify, so you were previously at a bank, right? And then switching over to an independent mortgage banker who doesn't, borrow at Fed funds rate, a little different, more competitive. Yeah.
So
interesting.
Different. I'm like, what the heck? This is so crazy. I didn't even know you could do this. And it's just been it's been interesting. It's great to be able to broker loans and to learn, that piece, and I feel like I have a better understanding of mortgages now that I've been here than I've had in the last 20 years of being an officer.
Wow.
That's crazy.
That's awesome.
That's really awesome. That's really awesome.
And then Academy, just to be clear, you're talking about the Mann Academy.
Yeah.
Kind of just for the, listeners, the amalgamation of information that we have for different products and different trainings
everything.
We have pretty
if
much.
You want to learn how to pull a credit report, you just type in credit report and you've got everything you'd ever know. It's crazy awesome.
And you have videos that you can watch of different people, and depending on how you
Deb's on some of those.
If you want to if you're a reader or a watcher.
I'm a star here. Not really. I just don't say no very well. That's what gets me in a lot of trouble. Oh, you need that done? Sure. No problem, Richard. I can do that.
Like when Doman and I texted you, our teams you the other day with the same question.
Yeah, the exact same
And
thing.
I missed the fact that you were going to reach out to Deb. So as soon as Deb's like, Vanessa asked the same question, I was like, oh shit. We're now bothering Deb, but I'm like, I know Deb likes to be bothered. So
I forgot you guys were in the same branch. I'm like, this is kind of creepy.
Because it was like at the same time.
It was. I got an email from one and a Teams message from the other. I'm like, you bet.
Let's talk about that. I mean, like that was awesome that like there's no direct compensation or reason for you to get on the phone and help us. But I think that like, we talk a lot about core values at Mann, and that's cooperative spirit, right? And I think that that's really quickly identified with managers at a branch level, team leads, and even just all the way down to anybody who is even an assistant, that they understand that like if we're all trying to go in the same direction, at some point in time, you're going to need someone else's help, and I think that the majority, I've never really run across the bad experience, but the majority of Mann employees are always willing to help and lend a hand.
Yeah, that's probably the biggest sadness when you hear somebody in our company that's like, I don't know what to do. Well, then email loan officers at. Like somebody will help you. Don't be scared.
Start to make relationships, even if you're working from your home or an office that has just a few people. You can definitely easily make relationships at Mann that are super helpful.
Oh, absolutely, absolutely. And I think that at any point that if you don't feel like you can make that connection, then step back. Like that's just not the Mann way. I'm like, even me, who doesn't hesitate, I have no problem being a loudmouth somewhere. Every once in a while, I'm like, I hope this wasn't already emailed and told to me. I hope that I didn't miss an email somewhere, but I got to know now. And within minutes, I have somebody sending me a message back saying, yep, it was sent out in May. You must have missed the email, but here it is again. And it's just, instead of, well, it was in May. You probably didn't read it. I don't know why you didn't. Blah, blah, blah. No, it's just like, here it is again. Help you out. Let's go.
Yep.
And it's just so nice
Then
to
you
have
don't
that.
feel like you need to do the research on your own because you're going to get your hand slapped because you asked a question that somebody thinks.
Yeah, you're not ready to ingest the information, all the time when it's sent. So
Yeah, yeah. And you think, oh, I'm just going to set that email over there. I'll remember to go back to it, and then you don't.
no one
And
goes back
what's really
and
cool
email.
is one of our branch managers from Virginia, a couple months ago, he shot me a message later in the evening, and he's like, I haven't done an RD loan for a long time. Can you answer a couple questions? Well, I don't know that anybody's doing many RD loans right now. They're a really strict program. They've really tightened up their belt. But I was able to answer a handful of his questions, and I got done, sending messages back and forth. And I thought, that is just so cool. Branch manager to a branch manager, just, hey, I don't know what the crap I'm doing. Answer my questions. And I just think some of that needs to happen more. Like, swallow your pride and ask the question. That's why we're all here as a team. So
I was curious. So going back to the earlier point, when you converted from the bank world to us, do you remember some of the, I wouldn't necessarily call it the negotiations, but when you were exploring Mann Mortgage and you were asking all those hard questions and, well, how does it work? And, we were now that you've been here for a little while and you go back to those conversations, do you have more, I guess, empathy now that you're like, well, it's just a whole different, because I know there's a lot of pressure for you. You're trying to compare apples to apples, right? You're being like, well, here's what we have now.
Asking the questions that are important to me,
right?
The knowledge that I have of where I was.
Right. You're expecting a line from, that child's game where you have these little lines and then these lists, you're like, apple connects to tree. And like, it doesn't necessarily line up. Sometimes there's maybe only 5 lines here and 50 here. It's like,
And asterisks everywhere.
I know, and little yeah. None really fit exactly. So you scratch this one with a big Sharpie, but it's like, so it's, as an IMB talking to someone, that's one of the things that if LOs are listening to this at all, it's like, it's not always apples to apples. A product mix, the way something works. Our construction programs here, for example, are really unique. The 1 and the 2-time close, how they work together. I think that's probably where a lot of your education over the last little bit has come too, because that 2-time product where you're not necessarily protecting a rate. And I don't know that people, your listeners know all the differences here, but I think that's really valuable for people to understand. They have the option of kind of estimating what they think rates are going to be in the future, and that if we're going to protect a rate, that there's kind of a cost to that too, right?
Yeah,
because you've shifted a little more to 2-time, I think, recently, right?
I have. And so when I came on, when I was having those discussions with my knowledge of trying to figure out where do I want to go, what mortgage company do I want to choose, I actually interviewed 18 mortgage companies within a matter of about 5 days.
Wow.
Because things were not going good at the bank and I knew that I had to make a quick decision. So I had this cool spreadsheet, which
guy in the black coat
has it ever been opened again?
Yeah, I go
have you?
Do every now and then.
Nice.
But so on that spreadsheet, I had things that were important to me, and then with Mann, so there's a tech stack that was important to me. So the built system, that was like, do you have built? Okay, for me that was,
and that's organizational software to administer the actual construction. That the fundamentals of how it would work mechanically were similar.
Yes.
Yeah.
Yes.
Okay.
So I knew that when I could still do my construction loans and my builders would still be happy because I knew that the built system makes them happy and I could continue to, because those relationships were important to me. And then knowing that we had the government construction programs, which was new to me, and then a 5% down conventional loan, which was new to me. And then the 2-time close, I was like, oh, I'll never use that. That's awful. Like,
why would you do that?
Scary, no way. Yeah.
But then I think my first construction loan that I was able to make application on ended up being a 2-time close. And it was a one that I know at my other bank, I couldn't have done it there. And so then I was like, okay, 2-time close are cool.
Okay. It's a product that wouldn't, it's better than what we didn't have before. Right. And that's where I think that product offering is unique because there's not a lot of IMBs offering construction, let alone both suites.
A 30-year fix, one-time close, and then a two-time close. It's such a great option. And so when I was talking to Mann, and I wasn't wanting to hear about two-time close, but now that I'm here, I would, if I was talking to a loan officer who was coming over, I personally would just explain to them what the difference is, and just so that they understand it, because if they haven't had it, they don't really understand.
Right.
And there's so many great reasons to have it.
Yeah. Do you want to protect your 7.5% or 8% construction loan while you build the home right now? And more people are saying no at the moment, I assume, just with the general sentiment.
Yeah.
Not to say that predictions are ever right, but
they lied all last year.
They've lied for 13. I mean, for 13 years, we all thought rates were going to go up, and finally, 10 years later, they did, and it's kind of interesting to think about that. But now the sentiment is that it's going to go down a little bit. Whether they do or don't, no one's, I'm not certainly going to say NYC, but
no, but really being in the low sixes, upper fives, low sixes. If you really look over my years, that's where I think the economy's been the strongest, is in those mid fives, mid sixes ranges. Sure, bounce a little bit, but that's where you see, I think, the strongest. But we also haven't seen prices as high.
No, that's the problem. It's a double factor, a two-prong. Home affordability, because A, interest rates, B, inventory.
So could you go back to that and say, okay, 5.5 to 6.5 is the safest? Well, maybe when that $85,000 house wasn't $250,000.
Well, and the inflation that, all of it's causing. Right.
It's just killing us right now. But so we can just only hope, right, that they get this crazy 2% inflation goal taken care of. And
who are you seeing build most of the homes? Is it the big builders, or are you seeing a lot more of the mom and pop builders?
Well, I'm doing a lot of manufactured home constructionals, and so they're factory built homes.
That used to be a dirty word, right?
It still kind of is, sadly.
Which is kind of unfortunate, because I don't feel like they're the same manufactured homes that we grew up with, or now you've got like LEED certified, like incredible homes that people are like, that's a manufactured home. I mean, that's incredible.
There's also some pretty shoddy builders too. So unfortunately, some of the builds that are going on, you'd almost be better off in a manufactured home. Do you want to hear my theory about manufactured homes?
Yes.
Anything that can drive down a road at 65 miles an hour and still be standing, we're good to go. Don't you think that's going to withstand some winds? I think so. Yeah.
Well, and I think that if you're a consumer trying to figure out, do I want a stick-built home? Or I can't call it a stick-built, because manufactured homes are built with sticks too, right? A site-built home or a factory-built home. If you go to the factory and see how they build them, it's really interesting, because they're in the nice dry environment, and the people can come and work and then leave their all of their stuff when they go home, and then come back because everything's locked up. And there's a nice assembly, and everything's very organized, and everything's being built beautifully. So if they
and to some degree tighter too. I mean, in a lot of ways, right? I mean,
no weather changes and stuff.
It's just incredible.
It's not raining.
Yeah. Your subfloor's not getting snowed on for you to scrape off. Yeah. So in answer to your question of big builders, little builders, I think in my area, we still have a pretty good makeup.
Pretty wide.
Yeah. And I think some of the builders that are the little people, they went to other jobs. They did. Some of them, they're just like, we're not going through this again. Some of our bigger builders, they just slowed way down. They were smart. They just scaled back what they had in their inventory, so they didn't have a whole bunch on the market. There's a little bit of overbuild for what's being able to sell with the rates as high as they are. But for the most part, we have still a good mix, which is good, because we don't want a monopoly with that.
And that is what I love about the man-made product. It lets the consumer choose. Right. Yeah. It really lets the borrower go say, I want to build a home with this person in this area. Whereas some of those large builders, like I think some people think they need to build a home. They think they need to go to that mega builder subdivision and select their 3 options and go on with life. Yeah. But it doesn't need to be that way. They actually, I think most people probably walk in if they have that preconception, and they learn a lot about what their options are. So I think that's what you specialize in for a long time. So, and having the way for them to finance that kind of on the back of the consumer's credit is ultimately gives them the power to decide. So, I like that.
I think construction loans are just awesome, because it is like, if you really think about the dream of home ownership, it is watching from the ground up that be yours.
Yeah.
So for us to be able to offer that, and
Have you built a home?
yeah. I'm on house number 4, and my husband said if he does it again for me, I
Wait,
will be
you've
doing
built
it alone.
4?
Yes.
You've built 4. Wow.
Yeah, we're on house number 4.
I've built 1 and it was fun and I loved it. And then life changed and I
then
needed
you
to
needed
move.
marriage counseling.
And I was like, yeah. It's like one of those shirts. Like I told this kitchen remodel guy at one point, I said, you should get shirts that said, I survived the kitchen
Yes.
remodel, and then have the brand logo.
Yeah.
Or my marriage survived the kitchen
There's
remodel.
a lot of truth to that. Sadly, there is. It's pretty stressful. Yeah, and I don't know. It's fun though. But it's different when I'm not super, super picky. It's almost the opposite.
But the first one's really, you remember, I mean, you walk out to the first time they excavate and you're like, yeah, that's my hole.
Oh, I do that on all 4 of them.
Right?
I have all these
it's
stages
fun.
like, oh my gosh, is this the hole? Oh my gosh, there's a wall. Like, who
That'll be the
cares?
basement.
Who
Yeah.
cares? Yeah. Yeah, it's not.
Yeah.
It's great, but I think that's really cool. Like moving into somebody else's home and making it your own, that's cool. But to just be able to walk into that for the first time, be the one and only that's ever been, I just think there's just some pride there. That's just cool.
Nice. And it is something that's really obtainable.
It is.
That if you know how to do it, you can actually do it. So if you want to buy land and then build a home, you don't have to make $1 million a year. You can make, I have people who probably make $60,000 a year and they're able to do that, right? Buy land and build a home. So
Patience is required.
patience is required.
Yeah.
Patience is required.
Yes. And women have that. Women were born with so much patience, don't you think?
Yeah.
Yeah.
I think so.
My wife certainly.
Middle name Patience. Every woman was named with that. So that should be an easy feat for all people to go through, don't you think? Yeah. Yep. Not really. Yeah. Yeah. And so you are like known in your area for renovation loans.
Mhm.
What made you fall in love with that?
Well, so when I started in being a loan officer, I worked I was a loan officer assistant and I did construction loan modifications. And I really always enjoyed helping educate first-time home buyers or people who maybe are nervous about building. And so renovations were exciting because it's an FHA 203K loan where you can put 3.5% down. You don't have to have great credit. The money that you put down can come from mom and dad as a gift. So I really enjoy helping that person. And
Solving a complex problem. Yeah, right.
I am a problem solver. Like, give me the hard thing and I will.
That's like what makes your heart smile. Yeah. That's
Yeah.
awesome.
Really fun at parties.
Yeah. Let me solve your housing issue.
But so yes,
That's nice you just had a baby, but let's talk about the renovation program.
Yeah, that is way more. But yeah, because once I did my first 203K, I learned the steps, and the steps don't change, but they're complicated, and so I just kept doing them, and then a lot of people weren't doing them, and I just kept doing them. And
Yeah, that's what I find in my area too. The first one that I did, I had no clue what I was doing, no clue, and my condition list that came out was 3 pages. And during the time, like it was a half a page of conditions was a standard loan for me to be 3. I'm like, I don't even know. Okay, this is cool. So we just dove in with 2 feet, but it was really cool because the first one that I did was an addition to a house. They added a garage and a whole master suite above it. So it was a pretty intense, yeah. So it was pretty intense, and you had all these different studies that had to be done and all that. And so I'm like, oh, the little guys, the little ones that just want to fix carpet and windows, that's totally easy. Yeah, I got that. But it's really fun because people can stay in the house that's theirs and just add and change and purchase and refinance and all that because program's just awesome.
The rate is maybe a quarter higher or 0.375% higher than a non-renovation loan. So the rate's not that high. And then the closing costs aren't that excessive. So if you really want to finance something, well, a lot of people, they will buy and then they say, I'm going to buy it and I'm going to fix it up later. So I'm going to buy it now and then fix it up later. But the later never comes, or maybe it comes right before they sell it 7 years later and they don't get to enjoy that time. So a renovation loan lets them buy it, do all the things that they need to do, and live in a home that they're proud of.
Yeah.
Right away, and finance it, and their payments aren't that high. But people don't know about it because it's not something that you would really have a chance to know about unless you really talk to somebody who's specialized in it.
It seems like that's a huge opportunity with this big it's like we have this inventory shortage. Some people have said, a 10-year plus shortage. And then what I've been kind of interested in, no one seems to really be talking about it yet, is the baby boomer thing that we did talk about for a little while, but we have this huge generation of people who are looking to pass off their largest asset to their kids in the next, handful of years. And that is going to create an inventory release. And so I don't know if that's going to solve the inventory issue or not, but certainly renovation seems to be a win-win when you think about that sort of thing. So you're solving the inventory issue and you're taking mom and dad's house or someone's house, maybe it's an old tri-level from suburbia, and you're scraping the old popcorn ceilings and doing it how you want it. So that's an interesting product for that problem, which I am waiting for a lot more studies and data around that baby boomer piece, because I don't if you look at nursing facilities, nursing homes and geriatric facilities, things like that, there is a problem looming, and in-home care, certainly being stretched to its limits as well. So,
do you know what's interesting though with that is, and we see this in our area, so definitely chime in, but we have so many parents moving in with kids and kids moving in with parents. And so I wonder, to that point, yes, that's going to be the case that we have people going into nursing homes and additional care needed, because that's always going to be. But it just makes me wonder how many people just have their families moving back with them because they financially can't afford to be on their own. And so you almost create a little bit of a solution with that. But we have a ton of that going on in
That's
our
an
area.
interesting one, right?
Multi-generational living. And it seems like it might be something that is going to continue to become more and more, because it's almost like a lot of people, they're very proud and they don't want to live with their mom and dad. But then you step back and you see, okay, well, my friends are doing it. Maybe I'm not the first.
It's the new cool thing.
Let's try it. And then when you try it, it's not that bad, right? It feels good to be able to save money.
Well, your family unit actually gets tighter too. If you look at it, it's like, I mean, it's funny. It's the attitude of, I've had a couple of people work for me over the years. One recently who stayed in a RV with like 4 people and 2 dogs for 2 years, pretty much, while their home was, that one home was trying to sell and it wouldn't sell. It was kind of this kind of limbo territory. And then they finally got the other home closed, but they look back at it with positive memories the whole time. And even some of them were teenagers and, preteens, and it's like they were happy as clams. But it was all attitude. Of course, it's not that you have, 3 square feet to yourself. That's the problem. It's attitude to some degree. Certainly we'd like a little more than that, and that's extreme. But I mean, how many generations before ours, you had rooms with 4 or 5 bunk beds in them, and that's okay. That's the way the world worked. It's funny. I think we are going back to that a little bit, but I do wonder if that's going to solve some of the inventory, because all of a sudden you went from needing 2 to 3 homes to 1 home immediately.
Yeah.
Interesting.
For multiple reasons.
Well, and you can work from home. So if mom and dad are having a problem, you need to move in with them. I can't think of, aside from most office jobs are probably going to accommodate you. Yeah. Very few would be like, absolutely not. You're in a tough situation. I mean, there's certainly some, but.
Well, and if you look at the employee reports, the jobless reports that have so much impact on our mortgage rates, they're saying employers are trying to keep their employees. So if it comes down to that, is like, this is a key employee. We don't want to lose them. Right. They're really good at their job. I don't care if they have to work from their basement.
Especially if they have a good reason.
Yeah.
A good reason. Like, I mean, if they just were like, I just want to move, to the Keys and, whatever, and sit on the beach. I don't know why that has a different flavor to it. But if someone's like, I need to move back because mom and dad are having problems, I mean, good grief. We would certainly try to accommodate that.
Well, I look at my own team and I'm thinking, whatever we have. That's a very complex office setup, and there's always people in and out working in the office and working from home. And I look at that, and what a blessing to be able to have that technology to do that. My mortgage years go clear back to when we hand wrote 1003s. We couldn't have worked from home.
Did you have a physical time puncher on the wall?
Oh, yeah.
Yeah, with the cards.
Yeah, it was. Yeah. I did. That was so crazy. That's how, there was a typewriter. And sadly, I don't know what happened to that typewriter. It was probably worth
What a satisfying click.
Yeah, it was. We had to drop all of our packages off to UPS. So I look there. I mean, that was definitely something that crossed my mind when COVID hit. If this would have been 20 years earlier, Yeah.
Way
To go
different.
paperless and all that stuff. I panicked. I
Yeah, it
panicked when
almost-
I didn't need filing cabinets anymore.
It expedited what was already kind of occurring and solidified it in a lot of ways, for sure.
Yeah. Yeah. It's really awesome to have the perks we do.
Yeah.
Definitely. It's kind of like a double-edged sword, right? Though too much information gets us in trouble too. So it's right there.
We, speaking of multi-generational households, we just brought on chattel loan
Oh,
financing
yep.
here. And that's really cool because you can, so let's just say you own your house and your land, of course, and then maybe you have like an acre and you got some room and your parents want to live there. You can put a manufactured home on your land and use this chattel loan. So the mom and dad have the loan on the house on their manufactured home. And then you have your, so it's not blended debt. And then you can help watch them, right, as they're aging, or they can help you.
They get their own space, so kind of the best of both worlds. Yep.
Yeah, that's awesome. Kind of like a chain, like an extended accessory dwelling
The ADUs.
type thing.
Yep.
Yeah, that's really awesome. My mother-in-law has a little accessory dwelling in our backyard, and it's pretty awesome to have that for sure. It's because enough space for their own, but 2 seconds we can be out there if something's wrong, and that's the world we live in right now. She just, do you know how much it costs to keep somebody in a nursing care facility right now? It's like $5,000 to $8,000 a month.
And that just takes up all of their savings.
Yeah, aside from an inheritance going to kids, like set that completely aside. I look at my own parents and their financial situation, and they've prepared as good as they could. They were baby boomers, but like we could only leave them in there a couple of years, if even that.
Well, in the in-home, so if you're trying to just say, okay, well, Bob needs out of bed in the morning, and you know, and then maybe we need to make a few meals that he can nuke throughout the day, and then, you know, they come once a day. Even that's, you know, $30 an hour, and now you're at what, 4 or 5 hours a day, and oh my God, I mean, you'll chew through a savings account pretty quickly, even with that. But that's the other part, I guess, to bridge completely into like almost a reverse product, which is really interesting to me, and my wife's a loan officer too, so it's kind of fun as a CFO to see her struggles and to see where she finds an opportunity. We worked in that industry for years and years, and she ran a non-medical home care company, but saw this issue where people couldn't afford to stay in home. Most people obviously prefer to age in home if they can. Very few would, you know, typically.
That's not their dream to go to a nursing home.
No, I mean, typically not. And so.
Yeah.
Yeah. So some people, you know, most people at least say they want to do that. So building custom care plans for them. And then she'll see, you know, she knows all the Medicare, Medicaid rules, and seeing, well, we could afford it, but you kind of have to tap into that home equity element. And, you know, that over the years has had a really negative connotation in a lot of ways, but she saw it as a loan officer and saw that, oh my, we can actually solve a problem for a lot of people. And, you know, I think a lot of people are so proud of their homes. They're wanting to hand it off to their kids, but the kids, you know, probably want to reno it anyways if they were going to inherit it. And so at some point, I think that the thing that most kids want is not to inherit, or not to have to empty their own savings account while mom and dad are aging. And so if they can tap into that reverse product that, you know, we're shopping that one constantly too. I think we just kind of switched some of our takeouts for some of that product as well. So,
do you know what the saddest thing about reverse mortgages? I have a reverse mortgage specialist in my office, and she's awesome. But I've interviewed probably 2 or 3 groups. You know, when you deal with reverse mortgages, you're dealing with people that are over the age of 62. They're starting to get into those older years. I've interviewed at least 2 families because they bring their kids. All the kids need to be involved, and those kids are like, nope, you can't.
Yeah, you're not selling it to just them. You're selling it to a family.
Kids,
yeah, right.
And I want them educated.
It's important.
To ask the questions,
but it's a harder, longer sell cycle.
And I'm totally fine with that. Yep. What infuriates me is when I have clearly on paper, mom and dad make $1,500 a month in a fixed income. They physically cannot go get another job. This is the income they have.
Right.
Their medications are $1,200.
Yep.
They don't have
they're upside down immediately.
Whatever. Right. Like they don't even have the ability to go buy beans and rice. Right. They can't even live on beans and rice if they wanted to. And those kids are like, no, because what's going to happen when they die? What's going to happen? That's going to be in a negative equity position, and I'm not going to get my inheritance. Screw you. That's how I feel.
Yeah.
And I just think that is so selfish. And my dad's got opposite problem. Like you just loan all the money in the world. Like you're dead. If we let your house go because you're upside down in it, not my problem to clean out. You get all of those treasures in that house.
Yeah.
So that I just want to smack, which I think that the United States government who regulates us would be mad if I smacked somebody.
Yeah, I think so.
But it's come across my mind a lot. No physical smacking.
I can confidently say, I can confidently say that's not allowed.
Yeah, in case you were wondering, I kind of feel that's an unwritten rule that you can't punch
No, it's in
somebody.
there. No, we have it written. Yeah.
It is written in policy that I can't throat punch some kid because he won't let his mom do a reverse mortgage because she can't buy beans and rice. Good to know. I don't think I caught chapter 3 about that. Okay, good. That is a legit problem. I just think that's super selfish for kids, that it's all about what are they going to get. I think that's you didn't have blood, sweat, and tears in that house being free and clear.
No, it should be used for them to live comfortably. Right.
Absolutely.
I mean, that's really what the equity should be used for.
And now that the regulations have been put in place, when those programs first rolled across my desk, sadly, the amount of money I saw loan officers making. There was one loan officer in our community, I kid you not, when he got his paycheck, it was $36,000. That's sad.
Yeah.
Yes, because there was not a regulation on how much money you could charge. And now the Department of HUD has come in and said, oh boy, you're not doing that. Yeah. And it's so heavily regulated. And the sad thing about it is that went on, and it's just like every section of our lives, the bad apples made it bad for everybody. So now we have this program that is incredible for that community. Incredible. And it's been damaged by what went on 15 years ago. So it's a big
that gave it such a negative flavor.
It did, yeah. And sometimes you can get people to like, okay, look, here's it in writing why we're okay. Here's the proof that you are okay and you are being watched over by some regulators to make sure you're not being taken advantage of, but you still have those baby boomers, because my dad is one of them, will not let his bank accounts be online because somebody's going to know how much money he has. Sorry, Dad, your $12.77 in your checking account is already out on the internet. It's not going to change.
There was a breach somewhere 10 years ago. That was all.
Sorry.
Yeah.
You're already in trouble. But don't tell those baby boomers that. So, yeah. Okay.
Awesome.
Well, what do we think? Anything else we know? Vanessa's.
I don't know what I know so much.
Oh, let's go.
Vanessa does know a lot. Yeah. You got invited to go to Built.
Yeah.
Oh, yeah.
Built is
that was a big deal.
I absolutely want to talk about that. So Built is our construction software, right? That we use for babysitting draws.
Yeah. Yeah.
And you got invited to go. Why? Tell us about that. That's cool.
Well, so when I was in Coeur d'Alene at our event there a few months ago, we brought some of the Built team there. And so we got to hang out with some of our what do you call it, like third party vendors.
Representatives. Yeah.
So when they were there, and I knew they worked for Built, and I told you about how Built was like, if you have Built, I'm going to probably come work at your company.
Yeah.
And
that was your selling point.
Love you guys. You guys are so awesome. And so then they called me up and they said they're having this kind of a Zoom conference, and they wanted to interview a loan officer. So they flew me out from Oregon to Nashville for.
Not a bad place to hang out for a few days.
And did a great interview. And so I love Built. So Built helps. So once my loans fund, I can manage my draws through Built. So I get to see
the inspections and all of it. Yeah,
I get to see the inspections. I get to see how much has been pulled from the construction loan funds, and then the homeowner gets to see it and the builder gets to see it, and it's all very easy to understand. And the photos, the inspector takes photos of the work that's being done prior to the draw being completed, and those photos are in Built. So as a loan officer I think I have like 30 loans in my Built pipeline, I can go in and see how much has been drawn on each job and see the photos. So if I want to go in and see, how the project's going, and then I could call the borrower. And so it helps me to have great talking points with my clients.
You know what's going on. Everybody knows what's going on. Yeah. And what I love about it is it takes away all the complexity and all those different pieces, and it distills it down to a number. And you actually can say, I am 57%
Yeah.
along my build, or 75 or whatever.
They're
right?
random numbers. They're not even like 5s and 10s.
Right.
you know?
There's a calculation.
66%. Okay.
Right.
How did you get
And then you have a
that?
draw progress, which is also conveyed in a simple percent. So everyone can understand, like, a red flag, maybe I am, 50%, but I'm 80% drawn on the house. Whoops. We need to figure out where that gap is, or vice versa. And you're like, okay, is someone not getting paid if it was flipped, and that sort of stuff. I really like that. At some point it gives you an analytic to go dig into and make sure that everyone understands where the risk is on that home.
Right.
So,
and the people who work at Build are super helpful. So if you're a loan officer that doesn't quite understand it, you could call them and they'll help you understand it better. And it's a wonderful tool. So,
And it's a time saver. I mean, as a loan officer, we're not required to go out and check those projects to know exactly where they're at, but we do have a due diligence to make sure the contractor is doing their job. So it saves us time. We can just jump in there like, wait a minute, you've had this construction loan going for 4 months. How come there's only a hole in the ground? What's going on?
Right.
And we didn't have to drive there to
Right.
see it. So it is super nice that way.
yeah.
So,
and you're not going to know whether the insulation was stapled on right or not, but you can understand 67%, done from the inspector really is how that data gets in there. So
and most of those inspectors are general contractors or some
licensed,
sort of, they have some sort of training and knowledge of that aspect of it.
Yeah.
Okay.
I had one where the borrower was, I looked and the loan funded about 3 months ago and no money has been drawn. And so I was calling her and I was asking her. And so she basically said, I don't even know what I'm doing with the project. I don't think I have enough money to even do it now, but the loan's already closed. So it's the wrong time to be having that conversation. So I was able to talk to her and help her figure out what to do. And so if I didn't go into Build and I didn't know she was not far along, I wouldn't have had that conversation with her. And it was early along in the build process where she has time to figure out what to do. And
Not at 12 months.
it helped
Figuring
me,
that
it
out.
helped her, it helped the builder, and it helped my company. So it's huge.
yeah, because there's really a clock on it too. Like we
Yeah.
have to have that project done within, if there's a delay on that start, it gets really hard to meet the deadline on the back end, right?
And in a 12-month period of time, you really are missing 2 winter seasons depending on where you're building. So
Really
you really
depending
can't
on-
have a
yep.
delay. You gotta be ahead of those winter things that you don't have control of. So, okay, so Caleb, in your crystal ball, that mine's been ran over by a bus a couple of times and glued it back together. What do you think is our biggest gain with seeing interest rates go up? It's a lot of negativity for interest rates going up.
Oh, when
So-
they went up, you mean?
yeah,
okay,
that when we hit
you're
our
talking
high
about
and
throughout
all
the-
of that,
yeah.
instead of our 2% rate that every Tom, Dick, and Harry was getting, what's our gain in the market to have an interest rate as high as we hit in the 8s and such?
So the pros and cons, I guess. So the pros of the interest rates being high, I suppose, at this point would be that we have a little bit of pent up demand. I think home affordability is not a good thing generally for us, but the silver lining, I guess, is what you're asking for. What are the small pros? I think looking forward, we have a bit of a pent up demand. The data, I think what I read recently is like an architectural survey was about it was around 25% people are surveyed are ready and interested in moving. There's another 20-something% that actually are interested in the near future. So it's almost like a 50-60% of people have a pent-up interest in
You're
moving.
just sitting there waiting.
Just waiting. And so that's been growing kind of over the 18 to 24 months. Home pricing went up at the same time. And so interest rates, as they went from 3 to 7.5 to 8
in 24 hours.
in pretty much 24 hours, people were sitting here like,
How it
I can't. They were saying I couldn't buy that home before because, and now all of a sudden now they can't. They definitely, the mortgage payments don't clock out at all. So they're, at this point, you have life events that have occurred. You've got people moving, people having kids, these things. And so to some degree, there's been some pent up demand that couldn't be solved by a simple renovation or something in their home. And they truly want to move or buy or whatever it is. And I think there was some residual pent up geographic movement still too, that, people were trying to, in our political culture, I think was shifting from state to state largely. I think some of that's still occurring and didn't happen, and people are ready to pull the trigger on some of those moves too. So all of these things coming to a wind in 2024, I think, leaves us with any kind of condensing of rates, like more recently in the last, say, month even, it's come down a little bit. I think any more movement, people this spring are probably going to be more interested in exploring those options. I also think we could see home prices, because home affordability is such an issue. It impacts your supply demand curve on homes, right? So if people can't buy the home, you can't sell the home. So if people want to move, all of a sudden they have to adjust sales price. Yeah. And so that certainly has impact on people. If they really want to move, they're going to lower their price. And the nice thing about that is there's equity in the home, probably, right? Home equity is kind of at this all-time high because of that high. So they're willing to go down, 5 or 10% potentially. And so you're going to start seeing probably a little bit of a contraction in home prices in some areas, especially where the problem was expounded from the crazy, some of them 200, 300% home in, a span of 1 or 2 years.
Yeah.
That was just unheard of. So I think you're going to see home pricing come back down. Home affordability will begin to solve itself to some degree. I'm curious also what the election year brings, because I don't know that any, regardless of what political side anybody's on, I don't think anyone would like to run on the campaign of the nation's really largest industry at like $12 trillion is going to run on a campaign where nobody can buy homes right now. Like that's not a good campaign to run on. So I'm guessing that probably tied to the quantitative easing that you're going to see, and that's kind of what the market's estimating too, is that there's at least going to be a stop of the quantitative easing this year. Whether they're going to go buy MBS again remains to be seen. I doubt that. I don't think anyone really wants that, injecting steroids into the mortgage industry like they did.
The people who understand don't.
No, they don't. Yeah. And even though, we'll try to, benefit from that opportunity when the market comes, is great, but we want it stable. It's already volatile enough without that. So if they just stopped the quantitative easing, meaning they were shrinking the balance sheet, and they held, that would help tremendously on interest rates. How much, it's really, that's more complicated than I could do on this podcast. But certainly you would have a much bigger pressure to get into the fives, which is, I think, to your point, probably where things should stable out.
Yeah. I'm excited because I've been in this industry long enough to have people come in and out and in and out and in and out. And I get so frustrated with people's advice of do this. But did they explain why? No, they didn't know how to. Don't jump into an industry you don't understand. Are you going to go have heart surgery with some guy who went to dentistry school? Probably not.
But he's cheaper. He's way cheaper.
But he is cheaper. Yeah. Or he's my best friend's brother, something once removed. I get it. You want to have those connections, but man, do your homework. Just do your homework. And it's nice because there's always that cleansing. There always has been. In the real estate side and the loan officer side, when you have to go fight for the loans, education is key. If you can't rattle off underwriting guidelines like that to be able to keep a loan moving forward, you go shovel.
I think that's another thing that you guys as loan officers really need to make sure you focus on is if people do begin to move, I think there's some interesting trends, people moving out of state or moving further away, and making sure that you're equipped to help them. Or that Mann Mortgage, at least, is, in our network, is willing to help them, because that's going to be really valuable, because they're going into a new area. If they think that they have to go reach out to a new local originator and they can't lean on you because you're back, in Montana or wherever you're at, or Idaho or Oregon, it doesn't help them necessarily. So if you say, no, I can still help you when you're moving there, please, that's invaluable, because that pent-up demand will need trusted advisors.
Yeah.
Not the dentist, surgeon, that also wanted to try their hand in mortgage this month.
Yeah.
So,
and that's where Mann Mortgage is so all over the country. It's, hey, are you licensed in this state? No. And I heard it's a quick search of remembering whose branch is where. I'm like, oh yeah, but my friend so-and-so is. And getting to know each other through the branches, it's super easy for me to refer. Here's all the stuff that I have on them. take care of them, you know, and they're staying with a Mann mortgage.
Yeah. Or you're licensed in several states and you
I
might
am
be able
licensed
to,
in-
right? So
Yeah, which is so crazy because I was fine with my Idaho, Utah, Wyoming. And then I had family move to Texas. And then I have a loan officer that wanted to get licensed in California. So I had to because I'm the branch manager. And then I had a loan officer who wanted to get licensed in Montana. And I had to because I'm the branch manager. So I have all this licensing. Huh. Okay. I'm licensed in 17 states. Just kidding. Not that many, but more than I need. But
that's really valuable as this pent up demand goes away that we all
Yes.
work together on that because you don't want people to get their mortgage from the dentist. That's not a good idea.
no mortgage getting from the dentist. That is true. That's a really good tagline. Do not get your mortgage.
Again,
from
it
your
might be
dentist.
cheaper.
Yeah. Don't let me do your root canal, though. I don't think that's a good idea.
It might be cheaper.
I got my Milwaukee. Yeah, bad idea. All right. Anything more you got to say?
No,
I
thanks
think-
for having me.
Yeah, I'm excited. This is good. Yeah.
Are you gonna go sit on the beach here?
Yeah, I would stand up and show you my bikini bottoms, but probably not appropriate because that's appropriate for what weather we got going on.
Make
out
sure you
there.
clip in a little bit of the wind out here. It's unbelievable.
Yeah, it reminds me of Idaho. That's what we deal with all year round, but we don't have mosquitoes when the wind's blowing.
That's true.
That's our.
If you do, that is one hardy mosquito.
Yeah, that's true. That's true. Okay, well,
All right.
there we have it.
Thanks,
my
Deb.
friend Caleb, my friend
Thanks,
Vanessa. Peace out.
All right. Bye.
Idaho.